Why is it important to remain small with respect to the number of staff while expanding so dramatically when it comes to asset size?
Yeah, I think it's important to know what your North Star is and what your DNA is as a firm. A lot of what's created our success is our culture. Everybody's connected. People help each other all around the world. Ideas travel, relationships travel. That's allowed us to get to where we are. And so one of the things we're very focused on as we go forward is to make sure that we retain that. But also, as we've been building the firm, the way our business works, you add people before the businesses grow. And it takes 10 to 15 years to get to scale. And what we laid out yesterday is we have the people inside the firm. We've been building these platforms for the last 10 to 15 years and beyond. So the people are here, and we're starting to get to this inflection point. So that's what we're told.
And it raises this question, Joe, about how you maintain a sense of morale and people not feeling overburdened while also expanding assets. And I know that the people are here, but this is something that a lot of companies are grappling with right now, which is you want to scale up, you don't want to lose culture, you don't want to get too big, you don't want to have too many middle managers, and yet people are getting exhausted. So how do you prevent that kind of development?
Well, I think the reason people join KKR in large part is because it is such an entrepreneurial culture, too. We empower our people. We encourage them to work and collaborate together. So we don't believe in silos. We hate silos at this firm. We still operate KKR today, 48 years later, as one firm, one global P&L that everyone's paid off of. So that collaboration, that one firm, is really what the secret sauce is at KKR today.
You talked about really ambitious goals across 3 platforms. We can go over them. This idea of asset management, the insurance unit, the General Atlantic, and then strategic holdings, which you kind of described. I would just say, some people might say a mini Berkshire Hathaway. You might say that they want to be a mini KKR. But why is Berkshire Hathaway kind of what you're going for in terms of what this is?
Listen, I think strategic holdings is a segment that we've been incubating for the past 7 or 8 years. And Berkshire Hathaway is an apt analogy in the sense that we look at a lot of business models, why certain firms have been super successful over time. And there are a lot of powerful messages in what Berkshire has built. It's the power of long-term ownership of assets, great businesses, the power of compounding, and the real power of smart capital allocation within your business. That's what Berkshire really excels at doing. And our version of that in strategic holdings is we've built a portfolio today within our core private equity business of 19 really great businesses that we expect to own for a really, really long time. And those businesses will start generating meaningful cash flow for us in the form of dividends. We started this business 8 years ago, and as those companies grow and deleverage, they are now in a position to start paying meaningful after-tax dividends. What we announced yesterday is that dividend stream we think will be $300 million plus by 2026, doubling by 28 to 600 plus million, and ultimately getting to $1 billion plus of annual operating earnings for us in that segment.
Yeah, and I'd say the background to all this is we're students of long-term value creation. And so when we became a public company in 2010, our market cap was $7 billion. It's now roughly $90 billion. And what we're focused on is how do we double that again and then do it again as we look to the future. And if you look at organizations that get above a certain size of market cap, their per share growth slows. The denominator becomes heavy. And so just like a lot of where KKR is growing today were seeds we planted 10 to 15 years ago, with insurance that we think we can double again from here, and strategic holdings that, to Joe's point, is going to have a very significant growth trajectory, we think we've created a model that as we look out for the next 10 to 15 years, we have a way to keep compounding what is now a large market cap at a very attractive rate and not slow down that growth rate. And critically, as part of all this, we've built it all, it's purpose-built, to be able to retain the culture. So we can have very few people in the firm, because we started this part of KKR with no new headcount. It was monetizing idea flow that was already in the firm.
So what are you going to do with that money? If it's kicking back all this cash, do you go out and buy some more companies? You can have 23 in the portfolio?
Yeah. Well, listen, a big part of our jobs in the next 5, 10, 20 years is how do we think about redeploying the cash we generate in our business, the capital allocation part of our job. What we talked about yesterday at Investor Day is in the next 5 years, we think we're going to generate $25+ billion of cash at KKR. So how do we redeploy that? Some of that's going to be to grow our insurance platform. Some of that clearly is going to be the right strategic M&A for us, as we've done in the past. A lot of that's going to be to grow strategic holdings, this new segment. And a lot of that's going to be for share buybacks over time.
What's fascinating to me is a lot of people in the industry are saying that private equity is not going to have the same kind of returns going forward. That the equities part of the composition isn't as lucrative just because of how high valuations are. There's so much money chasing so few companies. The exits are concerning. Are you moving in the opposite direction? Are you saying that people are kind of missing the boat a little bit here, Scott?
I think we hear a lot of that, and it makes us smile. I mean, the business has continued to evolve. When Joe and I joined, we had something like 15 investment people. We now have hundreds around the world, and we have several different capabilities that we've built to supplement that. If you show up as just a financial buyer today, you're not going to be able to do what we do. We show up, we've got teams that are sometimes 30, 40 people, operations professionals, public affairs, people that are focused on sustainability, a geopolitical institute run by our partner, David Petraeus. I mean, you have to be able to think broadly. Henry McVeigh runs our macro and asset allocation effort. We built all these tools so we can show up and act more like a strategic buyer. So how do we invest in good companies and help make them great? That's the business now. And so it's a bit of a misnomer. We don't think of ourselves as a financial buyer anymore. We have to improve these assets materially and critically, because we're so global and connected, we can help them go global.
Joe?
And our private equity business, while we've been in this business for nearly 5 decades, it is not a mature business. We have doubled the size of our global PE business in the last 5 years alone, organically. So we have flagship products in private equity in the US, Europe, and Asia. We have a series of really successful growth funds in technology, healthcare growth, and sustainability, and the world's largest core private equity business, which is anchoring our strategic holdings segment.
You mentioned Japan. You talked about Japan a lot. You talk about Asia, but then you talk about Japan. Why is Japan so key to the expansion?
Well, Asia for us is really an area we've been building and growing for 2 decades now, since 2005, and an area where we have, as a firm, have a really, really dominant position, the largest alts manager in Asia today. So we've grown from 18 billion of AUM to 65 billion of AUM in the last 5 years in Asia, organically, to give you a sense of the type of growth. It's the fastest growing part of the world today. 60% of global GDP growth is coming out of Asia. The most exciting consumer trends are coming out of Asia. So it's a natural place for us to be focused as private equity, as infrastructure investors, as real estate investors. In Japan, in particular, is exciting. It's around 40% of our business in Asia is Japan. Just given its 2 decades of deflation, it's coming out of this long economic morass. And the implications for Japan are profound in terms of where savings are going, in terms of corporate governance reform, the opportunity for us to really buy great non-core businesses from big conglomerates. So it's a very target-rich opportunity for us.
Yeah, and it's not just in our asset management business. If you look at the life insurance and annuity market, in the US, it's a $4 trillion market. In Japan, it's $3 trillion. So it's a massive market across a lot of what we do. And so we see opportunities to expand in multiple parts of KKR in Japan.
A lot of people are focused on Japan right now. KKR has a more dominant position. There's also a lot of focus on China and what to do with that. And a lot of people are saying we're getting out. You do have a significant presence in China. How do you think about how that lives, given the geopolitics of the moment, which are highly uncertain?
Well, listen, our approach to China, I think, has been consistent since we started our business there. We have 3 offices, Beijing, Shanghai, and Hong Kong. So we are committed to that market. But the complexity of investing in China is obviously much higher today. Our focus over the last 2 decades has really been focused on the consumer segment of China, the growing middle class, the urbanization trends in that marketplace, and that's the sweet spot of the opportunity for us. So we've invested in retail companies, branded consumer goods, healthcare. We are not leaning into these high growth areas that are geopolitically sensitive, like semiconductors, like AI. So we've avoided a lot of the areas that are currently creating a lot of turmoil in the market, and we're sticking to our knitting, consumer services.
At a time when there's a whole lot of expansion. Before I let you go, I'm just curious about the fact that you guys have worked together for 28 years, I believe.
Right.
I'm just wondering what you guys do every day when you come in. Do you sort of have a routine? Do you check in with each other? Do we ask about each other's families? I mean, how does that work, given the fact that you guys work so closely and have for so long?
I don't think we have a routine per se. I think we've just been such big parts of each other's lives. Think of it as like a family member, how you interact with them. It's kind of a constant flow back and forth, but there's not a routine per se. Yeah. But it's just, we've been together more than half of our lives working together like this. So it's incredibly natural. We spend more time together than most families do, you know, so it's super easy. So we don't give a lot of thought to it. It's just how we operate.